And Mr. Rajnish Kumar of SBI is on the phone line with me because they've set the home loan rate at 25 bips above the MCLR. The first of the rate actions, they've revised interest rates, of course, on various products. I would reckon a lot of these would be downwards, but let's get in Mr. Kumar's view on this. Mr. Kumar, good afternoon. Thanks so much for joining in. Before we get to the home loan rate, the first news flash that I have is that you've revised interest rates on various products. Can you tell us about these details, sir?
Interest rate on various products we have revised because MCLR regime has come into effect from 1st April. And now the MCLR is linked to different maturities and different reset period. So we have MCLR, overnight MCLR, 1 month, 3 months, 6 months, 1 year, 2 year and 3 year. And the way it works is that bank decides MCLR for different maturities depending upon the factors which go into MCLR calculation. And over and above that, given the risk profile and the competition market and the business strategy, the spread is over and above the MCLR. And that's how the rates have been derived at for different business segments. And this is across the businesses, including SME, agriculture, personal banking, housing loans, corporates. So everything has been revised effective from 1st April 2016.
And if I'm not wrong, the home loan rate has now been set at 25 bips above the MCLR.
Above 1 year MCLR.
Okay. Poonam, you want to take in some questions?
Yeah, hello Mr. Kumar, this is Poonam here joining from the Mumbai studio. So you are the largest financer in terms of the entire home loan space, and just for the benefit of our viewers, how would now how would a customer's home loan EMI or the interest rate that the customer now pays on the home loan that he has is different from the earlier regime of the base rate versus now the MCLR? How much would the rate of interest differential be for an average customer now?
Because we have the earlier rate was 7.55, which has become 7.45, and for the ladies, it is 7.5 has become 9.5 has become 9.4. So roughly the ballpark figure is that for a 50 lakh, your saving is 6 rupees per lakh. 6 rupees per lakh. That is the calculation. Means if you have a loan of 1 crore rupees, you save 600 in EMI.
Right. So in terms of the new MCLR regime, if I look at your entire base rates of not just your bank but also the various other banks, the difference between the base rate as well as the difference between the with the 1 year MCLR is just about 10 to 20 bips max across the various banks, including your bank as well. Do you think that this monetary trend post the RBI policy and post the MCLR, is there further scope of this differential to widen between the base rate as well as the MCLR for 1 year? Do you think that we would see further cut coming into the deposit rates and hence into the MCLR?
Deposit rate cut would depend upon each bank's individual position in terms of like what are their rates currently and what is their competitive position in the market. But as far as the differential between base rate and MCLR is concerned, both of course the formula for determination is different. But if the trajectory for interest rates is downward, and if that happens, then both will be affected. Now the differential, it is not necessary that it will always be 10 basis point, but base rate also we need to reset or have a relook at every quarter. Whereas MCLR, it is a monthly, we have to announce MCLR at monthly intervals on a predetermined date. For the next 12 months, the dates have been said that on what date MCLR will be reviewed and will be made effective. So 1st April means next would be 1st May and then 1st June and like that. And in the 3rd week of the month, we will be reviewing the MCLR.
Yeah. Mr. Kumar, just a point, most people that I speak to who are, researching the company as well or bank as well, say that it's very difficult to assess the margin impact with the spread of each of the loans. It's very difficult to ascertain what the spread would be. What to your mind will be the margin impact, cumulative?
The margin impact on whom?
Mr. Kumar?
Margin impact on whom? Like when you talk about margin impact, so I'm not very clear on your question.
I'm asking you, sir, if because of these changes in the loan rates, what's the kind of impact that comes in on the margins? Most people that I speak to trying to figure out what the impact of this changes would be, say that because of the different tenors of each of the loans, it's difficult to assess the margin impact. Would you throw some light on this, sir?
Right. No, basically the margin impact is that suppose base rate is 9.3. And again, like if we take the example of home loan, so home loan, the margin impact is that they have gone down by 10 basis points as of now. Similarly, auto loans and personal loans would have gone down by 10 basis points. But if you talk about the SME clients, then that would depend upon what their risk premium, depending upon their either internal rating or external credit rating. So margins would be different. And but definitely, I think for most of the people, margin has come down by if it is a 1-year reset loan, then by 10 basis points. But for the short-term borrowers, for example, for corporates, like if they borrow for 3 months or 6 months, or they go for on their revolving credit at a 6 months 6 months reset, then the as compared to the base rate, it could be either 15 basis point or 20 basis point, because our 6 months reset MCLR is 9.15, and similarly for 3 months it is 9.10. So most of the loans will be priced, I think, either linked to 3-month MCLR or 6-month MCLR for the corporates. And most of the term loans will be priced at 1-year MCLR plus whatever the spreads are.
Right. Mr. Kumar, just another question, a little broad base. If you look at the deposit growth, we are at a multi-decade low in terms of the deposit growth for the system. While the data that we are reading in terms of the credit growth, it seems that there is some pickup coming in terms of the credit growth. Could you just put into perspective what exactly is happening at the system level, and how will it impact you as a banker with the deposit growth coming in at such a drastic place low? Then how will it be an impediment in terms of further cutting your deposit rates there?
Yeah, that is a real issue about like if the credit growth has to be funded, we need more deposits. And if we need more deposits, then how do we price them so that the people who put money in fixed deposits, or depositors who put their money in the banks, so this becomes a bit of a limitation in terms of the ability to cut down the deposit rate. But because in the funding there are a couple of options, including deposit plus wholesale borrowing market. So it will have to be seen that on the liability side, how much cost is it possible to save without giving up the targeted deposit rate growth for any bank. So if we compare today, for example, SBI, our rate of deposit is already 50 basis point on an average. Across different maturities, it is lower by at least 50 basis point compared to most of the banks. But I think going forward, as the trajectory is moving downwards, so that impact on the cost of borrowings or deposits, once that happens, then automatically that gets passed on by way of a lower MCL, because formula is such that whatever you save in the costs on the liability side, that gets passed on.
Yes, of course. And that point is well taken as well. Thank you so much for giving us this first initial update on this revision.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.